If you think it's hard being an investor in volatile markets, try being a company that needs to raise money. One day the doors are open, the next they're slammed shut. It's the kind of time when a banker's advice can be invaluable, and the fees he charges seem like they're worth every penny. With us this morning is a man in charge of many such bankers, Raj Dhanda, head of capital markets at Morgan Stanley, the #1 ranked IPO underwriter in the United States this year, and one of the 2 firms picked to lead General Motors' massive public offering later this year. Raj, a pleasure to have you. Thanks for coming. Have we seen the end of these open and shut markets, or is that volatility that we've seen in the financial markets likely to continue extending into capital markets?
Well, thank you for having me, Eric. It's as you say, it's a fascinating time in the capital markets. We have had markets opening and closing with extreme speed, and we expect the period after Labor Day to be another period where the capital raisings will be on the forefront. Our perspective on the pipelines is it'll be one of the most robust periods for capital raising. Having said that, we're at the mercy, in large respect, to the volatility in the underlying markets. So when the VIX, as a measure of volatility, is at seasonally low periods, we get record issuance in March and April, like we had. May and part of June, markets are closed, access is limited. So in many respects, the period after Labor Day will be one, again, defined by companies anxious to raise money, investors willing to put it to work in new issues, but I think the underlying macro volatility is what it is and will be subject to that.
Okay, there's a question that comes off of that. Are we going back to, or at least are we returning to a time when supply and demand drive more about what's happening in capital markets and less these macro factors you discuss?
We are, in some respects, returning to an environment, as you say. Supply and demand defines the activity. And if you step back and look at the activity in the last 2 years, we've gone from an environment where equity is being raised to delever and repair balance sheets to in 2010, where there's more growth capital raised. The IPOs this year will be 6 times the volume they were a year ago. And in the credit markets, the volume is here where non-investment grade companies are raising debt at a record pace. So the markets are maturing. It's returning to an environment where it's defined by the supply and demand.
It has been an epic year for high yield. When you look at the range of capital markets, which ones are most open? It seems as though credit markets, you might say, have healed a little faster than the equity capital market.
Yeah, I would agree with that, Eric. The credit markets are further along than the equity markets. When you think about what started the financial crisis, I would argue it was the credit markets weakness there that defined the start of the crisis, and in fact, credit has come back quicker. So we feel like the credit markets are quite robust and open. I wouldn't say we are at the periods before the crisis in 06 and 07, but there is a real sign of robust access to the non-investment.
But what about investment grade issuance? I checked the numbers just a few minutes ago. It's at the lowest level since 2004. Why is it that investment grade companies aren't raising more money right now?
They actually just don't need it, or they don't in fact have a use of proceeds that is driving their behavior. Investment grade companies had record maturities last year. They were very active with record volumes, and in fact today they don't see yet a driving use of proceeds as defined by more strategic goals. So,
like M&A, for example?
So, for example...
is that just a lack of confidence among CEOs in the value of M&A or valuations, or what's driving that?
Well, I think it takes time to have confidence at the board level to do game-changing M&A. And so the decision to have a strategic transaction, regardless of your financing capabilities, takes more time. But I would say that the investment-grade companies are starting to return capital and engage in share repurchase, and smaller M&A financings are certainly bubbling up in the pipeline.
Raj, it's been great to have you here. We'd love to have you back, so please do return. That is Raj Dhanda, head of capital markets at Morgan Stanley, the #1 ranked IPO underwriter in the U.S.